Good evening and welcome to another edition of the weekend business program, Capital Market Live on Channels Television. I'm Ladi Williams. Great to have you join us. Now, let's take a look at how your money performed this week. First, we begin with the U.S. markets, which closed on Friday broadly positive, making a comeback rally following steep losses earlier in the week. The Dow Jones Industrial Average closed higher by 1.47%, while the Nasdaq Composite jumped 2.39%. The broader S&P 500 index posted the highest gain of more than 3%. In Europe, the major markets indexes also closed in the green as global markets look to regain some ground after a bruising week, with investors assessing the outlook for inflation and interest rates. UK's FTSE 100 rose by 2.55%. Germany's DAX gained 2.10%, while France's CAC index closed the day with 2.52% advance. It's also similar sentiment for markets across Asia Pacific as investors assess inflation and the global economic outlook. Japan's Nikkei 225 was surged about 2.64%, while China's Shanghai Composite gained 0.96%, while Hong Kong's Hang Seng Index closed higher by 2.68% on Friday. And back home at the unlisted securities market, activities at the NASD OTC exchange ended the second week of May in the green as both the security index and market capitalization recorded a 2.57% advance. At the same time, NASD investors gained 26.46 billion naira in value, which made the market cap to close at 1.05 billion naira this week, in contrast to 1.03 trillion naira recorded on Friday last week. At the same time, the total value of securities traded during the week climbed by more than 1,000% as the market recorded a total of 2.24 billion naira in value. However, total volume of securities traded in the NASD exchange went up by 96.12% to 33.95 million units, while total transactions or deals surged by 121.88%. Terminal this week. The duo of Central Securities Clearing System, Friesland Campino, WAMCO, and Food Concepts were the top advances, while Food Concept, which was among the gainers, was the most traded security for the week. And from there, we move to the equities market, which ended the second week of May with a hangover of positive sentiment, which had dominated the previous weeks. The market's benchmark performance indicators climbed higher into the 53,000 level after gaining 2.45% week to date at the close of Friday's trading session amid sustained buy interest on the part of local investors. At the same time, the total value of equities on the NGX climbed higher into the 28 trillion naira mark amid gains from key components across four of the five key sectors of the market. McNichols topped the gainers list again this week. It led 50 other gainers with a 59.52% increase on its share price. Academy Press led a pack of 32 losers, down by 13.71%, while the trio of Transcorp, Titico, and Jais Bank were major contributors to the 1.8 billion total volume of shares traded this week. Well, join us now in the studio to review the equities market's performance in the second week of May 2022 is the Deputy Managing Director, Interstate Securities Limited, Mr. Dolapo Ashiru. Great to have you on the program this weekend.
Thank you for having me.
Great. So quite a performance we're seeing across global markets. We saw the U.S. markets have some kind of breather. You know, this Friday, it's been a lackluster performance for those markets. We've seen the Nasdaq go down by points not seen in a long time. How are you seeing those markets right now?
The markets are basically reacting to the persistent inflation going on in the U.S. and other advanced economies. So there's an inverse relationship with the money market and the capital market when it comes to exchange rates. When the interest rate rises, right, money now flows from the capital market to the capital market to the money market, and when it goes down, it flows from the money market to the capital market. So because of persistent inflation in the U.S., the Fed said they're going to increase the interest rate in America by 50 basis points at least two more times this year. Originally, the market was expecting 75 bips, that's basis points. But when the Fed said they're going to increase it by 50 basis points instead of 75 basis points, the market now reacted positively to it on Friday. That's what happened.
And you know, from that reaction, let's go back to the week, before that, when the Fed announced that the 50 basis point hike. the market reacted positively, but immediately the next day, everything went crazy.
Yes.
All the markets dumped again. It even affected the crypto markets. We see that correlation with the crypto market and the Nasdaq. But where do you think the bottom is? Because at this point, most investors out there are looking for the bottom. Where do you think we're going to find
The bottom
that?
is not yet in sight, but they'll gradually get there. I think by the time they announce the next hike, we'll see the market tank a bit, but it will stabilize towards Q4 this year.
And hopefully inflation peaks at some point, because I know that's a major disruption to those markets at this point. But back to our stock market, we see the equities on and the NGX is on a rampage right now. For you, how far do you see this going?
I see it going on at least throughout Q2 and also pushing into Q3, because what is causing is basically very, very fantastic Q1 numbers, especially companies like MTN. MTN is really, they're basically printing money. Their Q1 result was on fire. I mean, if you compare to corresponding year period last year, there's a big difference. And also, what in the case of MTN, they're now moving from a telco into a techco. They're going to they're evolving to a tech company. They change their logo and they're moving towards a tech company because they also have the 5G license. That's good news for investors. They're also working towards starting the payment service bank. Good for investors. So people look, and right now there's a lot of drive towards data. You understand? Data is the next frontier for them outside voice. So you can see that when it comes to, and they're a clear market leader in the telco sector. That's why it's reflecting in their numbers, and people see a future for MTN. That's right. So we also saw some very positive signs also with the consumer goods sector. They were really on fire also because compared to corresponding period last year, things are getting better. I mean, now COVID is behind us now. Supply chain issues are gradually being resolved. So you can see, and even the bureaus, Nigerian bureaus, international bureaus, sometimes this week they're even on bid, full bid. You understand? And that also reflected in companies like Cadbury also. So it's a win-win for the consumer good because Nigeria, with a population of 200 million and more, you understand? This is a consumer goods companies delight our economy. So gradually we're also seeing them moving away from premium goods to discount products. So that's helping a lot. So you don't see people buying tins of milk anymore. People are now buying sachets and single-use products so they can get the goods faster and meet people, because the consumer wallet is under a lot of pressure right now, and they're trying to adapt to that, and that's giving them great success in the
I've noticed the consumer goods sector, that one has been doing incredibly well. We saw a company like Nicole actually posting sweet gains. But let's look at this. There's this discussion about who's actually participating in this market. Some say it's local investors at this point. Some also say some foreign investors that were not able to move their funds out double down, on the market. What do you think?
You're correct. Right now, for obvious reasons. First of all, because of the tightening over there and increasing of interest rates in the US and parts of Europe too, a lot of foreign portfolio investors are now taking their money back into those economies or keeping it there. And the ones that are really doing business now are the companies that are the FPIs, that's foreign portfolio investors, that already have money within the system. So you're not taking it out, but you're not bringing new money. So they're just circulating the existing money in the pool and moving towards companies that are clear market leaders in various strategic sectors like telecoms, like consumer goods, industrial goods, and the rest, and also the financial services sector. So we're seeing a lot of that, and the domestic market is also on fire also. I mean, the MTN IPO also helped. I mean, that brought in a large number of young investors into the market. And finally, women bought more MTN shares than men, surprisingly. So women are investing more than men now. So
it shows that women love to invest at this point.
And the fact that they made it easy through digital platforms also made the young and upwardly mobile professionals push into that stock and other stocks too, and increase their interest or appetite for the NGX.
It's quite interesting because I saw a couple of friends that never were involved in this market, calling me up, telling me how they're buying stocks at this point because they can actually just do it on their phone. So that digitization process is actually helping. But we've seen the all share index cross the 50K level, now 53,000. That was last seen about 14 years ago, and I'm wondering, this is swelling up. would we see a burst at some point?
I don't think so yet. I don't think we'll say, at least, I don't think so. Why? Because, let me give you, FPIs, they're good in the market, but FPIs, once they meet certain thresholds, they exit. And when they exit, stocks usually go down. But because the market is now largely in the hands of domestic investors have a longer waiting period than FPIs. FPIs, once they made 50, 30% profit on an investment, they cash out. But domestic people are there for the long run, and they're the ones that basically really they have a strong push in the market right now, and it's good for the economy.
And I'm sure there are a couple of investors that are looking at this market and saying, you know what, are we overbought? Can I still enter at this point, or do I wait for a pullback? But at the same time, some are scared, if I wait for a pullback, what if it doesn't pull back and it just keeps going?
As of now, we're not overbought. Okay. And there's still room for price discovery in some certain stocks also. So where the market is okay. I think to a large extent, the share price reflects the appetite of what's going on in the market.
Right. Yeah. And we know some traders don't like to buy the top. They like to wait for a fantastic, entry. But for you, what entry would you advise, some investor trying to get into this market at this point?
It depends on your risk appetite, and like I always say. And personally, when I want to make an investment, I look at it with a long-term view. So I think many of these numbers, if you are looking at it not for trading, but long-term, if you want to buy into companies of value companies in quote, I think even at these prices, they're okay.
Right. And, so far, the market has received, a positive first quarter result, released with a couple of companies doing really well with fantastic numbers. What do you think is behind, some of these strong numbers we're seeing, from some of these companies?
Yeah, people are getting back to work, post-COVID, you understand? And many of these companies too, they've made very good attempts to try and solve their supply chain issues. Many of them had the inputs for their products were imported, and there was a backlog. But right now, things are post-COVID normalization is what's going on now.
But we still have the war. The war is still weighing on major inputs, into that some of these companies actually need, for manufacturing. We've seen diesel, the price of diesel has surged to highs not seen, but we're still seeing strong numbers. And I'm wondering, can we still see, these strong numbers going forward?
I think to a large extent you see them, especially when the half-year results come out. You see them, it's sustainable. It's not a fluke, it's sustainable.
It's quite sustainable. Yeah. Well, we'll keep watching those numbers. Now, looking at the stocks, this week, which one do you think, stood out for investors, in this trading week?
I think it was the consumer goods. To a large extent, the share price of banks have basically plateaued. You understand? An outlier was MTN, but apart from that, sector-wise, it was the consumer goods. Many of these companies were actually on full bid during certain periods during this week's trading week. Some of them, you see, everybody is buying, but nobody is selling for a period, and later on, supply comes. So it was a lot of activity happened in the consumer goods, and it shows that a lot of people are now focusing. They've left the financial service sector, the telecoms, and they're now seeing value in the consumer goods because of the results they brought out, especially the breweries, Guinness, international breweries, and Nigerian breweries.
Quite interesting. Which one do you see taking the shine again next week?
I think all three. But to a large extent, I prefer international breweries and Guinness. Yeah,
right.
For now.
Well, you've checked your crystal ball, and we're going to be watching that. Well, we'll continue the conversation. We're going to be looking at the digitization of capital markets in Nigeria. That's our next conversation. And we still have Mr. Dolapo Ashiru here with us, and he'll be breaking all of that down for us in a moment. Do stay with us. This is Capital Market. Welcome back to watching Capital Market live on Channels Television. Now let's take a look at some market-related stories that made headlines this week. 21 Nigerian companies have been listed among the fastest-growing firms in Africa in a ranking by British newspaper Financial Times. According to the new findings, 6 out of the 21 successful Nigerian companies are listed on the Nigerian Exchange Limited. These include Prestige Assurance, Northern Nigerian Flour Mills, Julius Berger, Courtville Business Solutions, RT Briscoe, and United Capital, while AFEX Commodities Exchange topped the overall list. Successful companies were ranked based on their compound annual growth rate in revenue between 2017 and 2020, while taking the COVID-19 pandemic into consideration and highlighting the companies that successfully adapted to the resultant challenges. Meanwhile, the FT ranking shows that South Africa tops the list with 24 companies, while Kenya came third with 9 companies. And the Securities and Exchange Commission is proposing new frameworks that will make Nigeria's capital market become fully digital for investors. According to the SEC, the new regulatory framework undergoing review seeks to mandate compulsory adoption of information and communication technology, particularly web-based applications and devices for virtually capital market transactions. New rules mandate all capital market operators to have well-secured and functional websites, as well as functional electronic mailing system, either hosted privately or using a cloud service provider with domain name owned and registered by the capital market operator. The SEC explains that once the rules come into effect, the use of existing free email providers and private emails become unacceptable for official transactions. Well, we still have with us Mr. Dolakwa Ashiru, Deputy Managing Director into State Securities, to break these moves down for us. Thank you for staying, on the program. Full digitization of the capital markets, quite interesting. Everyone has been, looking forward to this. But for you, why now? Why not before?
The SEC had always been telling us to do this, and we've been doing it also. Even the NGX. But now it's not a document and a guideline. So the market has embraced it, and the market is working towards it. So the entire value chain is going to be digitalized, and I think it's good for investors, it's good for the regulators, it's good for investors, and it's good for capital market operators. So it's a win-win for all of us.
It's quite a win-win. Yeah. But I want you to paint a picture of what it's like, right now when it's talking about, operations with capital market operators. What is it really like, right now before, all of these guidelines?
No, okay, I'll give an example. MTN, that was basically the first eIPO, where you could go online, register, open an account, and buy the stock. So, and the market, the investing public embraced it. Right now, most stockbroking firms, nearly every stockbroking firm, you can buy or sell stocks with your handheld devices, or a laptop, a handheld device, or go to the website and do trades. So a lot of people have embraced this technology and already running with it, and that's what's obtainable all over the world. And Nigeria has not been left behind. And I think this also usher in some form of capital market integration regionally and also throughout Africa. That's where we're going to. There's something called the West Africa Capital Market Integration Committee, where we want to, so that in Nigeria now, I could do trade on the NGX, the Ghana Stock Exchange, the BVRM, which is the one for the Francophone countries in West Africa, do it seamlessly. So that's the future now. And other regional blocks are also doing it. And the future is that now all those regions will now merge together and there will be one platform for trading in on the African stock exchanges.
So that's quite interesting. So if, as a Nigerian, I can buy stocks from another...
Yeah, on one platform.
On one platform.
So your broker will offer you that, a bouquet, you understand? That's what we're working towards ultimately.
That'll be quite interesting to see. But there's another issue now, cost of full digitization of operations. How are you seeing that cost, as an operator?
Well, first of all, there's our minimum capital requirements. It gives us enough room for that, and also a lot of trading license holders are also doing it. Have been doing it gradually over time, and many of them are already there already, and most of them have already caught up. So we're doing it at our
and it's likely to also increase, cost of investments. Looking at the overall, capital market, but it is a welcome decision at this point. But let's look at investment-wise. What kind of investments do you think you'll be expecting to make to, make this full digitization process?
Okay, before I look at investment, I'll look at the potential, you understand, in the market. We have 200 million Nigerians, about maybe 8 million Nigerians have CSS accounts. So you can see there's a big gap. You understand? Going digital will in a short period of time, exponentially increase the number of investors in Nigeria, exponentially. And also, if you back that up with new products, new services, you understand, give them flexibility, this work making things I talked about is exponential, it will explode. So, and we see that Nigeria is a youthful population, Nigeria is a very youthful population, you understand, where the median age in Nigeria is about 19. So Nigerians we're increasing. There are more younger people in Nigeria than older people. And the younger people want convenience, they want ease. So the digital platform gives them that ease.
Right.
So for the capital requirement, to a large extent, there's room for that. We've already done that, and the NGX has held us throughout the entire process, and we've done it in an orderly fashion over the last 5 years. So most of us are already there, and we've embraced it, and the guideline is just making sure that it becomes the gold standard officially. So we're there. So let's look at the potential. The money, yes, substantial, but the potential of getting it right
trumps all of that.
Trumps everything up.
Right.
Yeah.
So, but looking at other advanced markets now, in the US, we've seen how the Gen Zs can just go on their phone, buy stocks, and we saw a trend in those markets. They call them the meme stocks. Some of these stocks that were not really doing anything, but you saw some of these Gen Zs were buying these stocks, pumping it up, and making a lot of money, with this. So I'm thinking, fast forward, right here in Nigeria, we have our youths trading these markets. How can we, make sure they're trading responsibly, so we don't see the kind of volatility we saw in more advanced economies?
Okay. First of all, I also remember that we're also going to we started derivative trading in Nigeria also. Gen Zs love that. Now, the regulatory framework is also, first of all, NGX and other regulators and even capital market operators are doing a lot of awareness, informing our clients, understand how to trade responsibly and everything, and it's paying off. So I think it's paying off.
Because it's quite important. Because I saw recently Warren Buffett was berating capital markets operators in the U.S., saying they've turned it into a gambling hub. Instead of where people can come make investments, sound investments and make money. But now we're seeing people just going there to gamble and trying to make a quick buck, as you say.
Luckily for us, it's not happening over here. Most Nigerian investors are becoming more aware. They're investing responsibly, and the regulators are making sure that investors are not shortchanged by any unscrupulous activity.
Because I know digitization is going to bring a lot of
to bring transparency to all these things also.
Right. Yeah. Quite interesting. It'd be very interesting to see, because I would like to just go on my phone, buy any stock I want, and just trade it immediately. I don't have to call a stockbroker and a long process of all of that. But just buy and make money. But it's great. I will see how all of that plays out in this market. It's a welcome idea, and we'll be watching that. Thank you so much, Mr. Dolapo Ashiru, Deputy Managing Director, Interstate Securities. It was great having you, and thank you for giving us your weekend.
Thank you.
All right, now let's bring you some expected activities in Nigeria's capital market next week. The coming week, traders expect the outcome of the May 2022 FGN bond auction holding on Monday, May 16, to influence the direction of yields in the bonds secondary market. The auction, the DMO will be offering instruments worth 150 billion through reopenings of the 13.53% FGN March 2025, 12.5% FGN April 2032, and a 13% FGN January 2042 bonds. Over to the Treasury bills market segment of the fixed income market. Traders expect the outflows for next week's auctions and the likely CRL debits to offset the inflows from 35 billion OMO maturities and 8.5 billion FGN bond coupon payments. Now, the equities market traders forecast that the bears may resurface across most counters of the NGX. All right, that's it on Capital Market. Thank you so much for watching. I'm Ladi Williams. Bye for now.